ladies and gentlemen of the crypto space. We're live on a Wednesday, March 12th at 10:57 a.m. What the hell is the captain doing around at 10:57 a.m.? I only got a little bit of time. Do my best. I got to about 11:30ish, 11:45 maybe. Let's see how far we can go. Okay, so this is, you could say nature is healing, and there's always two sides to a coin. But this is the healthy, I have described this as like a keto economic situation versus like a glucose type metabolism, um, which are really two sides of the same coin. Both facilitate energy for a person, but they do it in very different ways. So the dollar, yet again, or finally interacting with a relatively short time frame, 100 SMA in the 1 hour. I literally go to the 1 hour to find a moving average rejection. Um, it's still early, but then the 1 hour moves very quick. But this is interesting. So I was watching it level off since since Friday. Now it's Wednesday, and we appear to be expressing resistance on the 100 SMA. You start to see lower lows, and we're so close to that 102 level. That's so interesting. 102, and this is, we haven't seen anything like this since 2017, really, I'd argue. You have to zoom out to the monthly to be able to see that. We're at levels last seen in 2016, which is the start of the 16-17 cycle. Then you had 2021. Um, but let's go over to the 6 month. That's where you really see it. Go figure. So from a candle perspective, the 6 month in 2020 barely got to the 103.49 line, but we're right there pushing down through the 103.49 line, which is pretty much where the candle started or popped out and eventually closed down here within a 6 month period of 95. This was the top, I guess you could say, the start of bullishness for crypto in 2016. So we're getting into that level finally. It's taken years to potentially reverse this pattern that we have been experiencing over the last years. You got to remember, this is 22, Q1 22. So it's 22, 23, 24, and we're already in March, Q1 of 25. So it's taken 3.25 years to push back into 2017 territory with regard to the structural, that type of structure of global currency supply and how new global currency supply comes online. And that's why we see, for instance, headlines like Canada issuing US dollar debt. They're not selling US bonds. They're literally selling Canadian bonds backed by Canadian collateral, and people are buying them with US dollars. They're selling them to raise dollars. And that does, and when the world does that, that takes buy pressure off of the dollar. We go back to the 1 hour. That takes buy pressure off of the dollar, and because they're raising the dollar instead of having to buy the dollar from the open market. And then to top it all off, they sell the dollar because they're buying things. When you buy things, you're selling dollars. So that puts further depreciative pressure on the dollar, on the DXY, but obviously all the cross currency pairings as all of that sell pressure filters through the system. So this is exactly why, if you zoom out to a 6 month on the DXY, you get this remarkable cyclicality over the long-term time frames. They're really structural regimes for how the dollar is manifested internationally, how it's printed domestically versus how it's printed internationally. Um, and it's really different worlds. The world behaves very differently under these different regimes. Up, down, up, down, up. We haven't seen down. So this, could this be? Could this be a higher low, continuing the appreciative trend of the dollar that started in 2008? Or do we enter a regime change where we get a depreciative leg from the 6 month perspective? I still have these time bars down below with the lower low trend line, 4,748 days between January of 95 and 2008. So maybe we see something like that here. So, but this is extended. This is a very long period of time of dollar bullishness post 2008. It's been nonstop up since 2008. So maybe we see 10, 15 years of dollar depreciation. In such a case, that is perfectly consistent with what folks have historically called the crypto super cycle, where you have higher lows and higher highs across the entire crypto space as the world has a capacity to print their own currency and issue their own debt to raise dollars instead of buying dollars. So you get the lower valuation of the dollar, which increases the purchasing capacity of foreign currency around the world. And there is much more foreign currency than there is dollars. As I said, plus they have their own printing presses. Um, that is why we're seeing interesting or at least bottoming activity. I think folks are getting a sense of the regime change. They understand how we got to where we are. They understand that things are quite different with the current administration, and it could be ushering in such a dramatic shift as a regime change, a currency regime change. That's what these ups and downs are on this chart. So when I see things like this, I'm like, this is exciting. This is taking a long time to get to where we are. Um, so now is the time to be prepared, which is why I post on X some my documents and the new one this morning, which I'm pretty much just finishing up. A little bit of light touch improvements here and there, but that's all preparation. Time to be prepared was yesterday, because that today you already did the work. And that's the same thing with regard to capital management, legal structuring, entity creation. It's the same as being early for a doctor's appointment or whatever, being on time, just being prepared. That's a good way to live one's life, to avoid rushing. Avoiding rushing avoids anxiety, and that's everything. The better you avoid anxiety, the better you're going to be at capital management and executing in these crypto markets. It's really as simple as that. That was kind of the thought I had. It'll be a relatively short stream. Let me hit some comments. If you're on X or on YouTube, please feel welcome to post any questions or comments. I'm more than happy to talk about anything. Um, we'll do. I'll do my best to get to everyone's comments. Joel, good morning. Assume, good morning. Yield Maxi, hello. Fugu, look like a ninja. Was that Assassin's Creed books I've said when I was at work this morning. Extra crispy, Arrow, Peter. This is a good friend from back in the day. Hello. Hey, Lewis. At what rate will the Fed cut rates? It doesn't mean anything. The Fed is just an expression of the story that's playing out. Them cutting rates just acknowledges that story that's playing out. With Truflation showing true inflation at 1.3, 1.4%, the Fed will is a reactionary body and they react to 10-year yields coming down. But look at the 2-year yields at less than 4%. So if the 2-year yields come down to at least like the 200 on the weekly, three and a half. If it's a three and a half, Fed's cutting rates the next time they possibly can. Um, so their eyes are on the yields. They love those yield spreads. They love their inversions and the uninversions. So they're a reactionary body. They don't tell the story. They literally just respond to the story that's playing out. So by the time the Fed's cutting, the market's already pricing in what the hell they're cutting for. That's probably the best explanation for it. I'm not too interested in the Fed cutting rates. Um, More interested, exactly as you guys would think. 10-year yields move and the DXY tell us the story we need to see. And not much else needs to be inspected, in my opinion. Everything else is just a conversation of what to own and the rules, rule 1 through 4, uh, and try and keep it simple. Otherwise, anxiety gets the best of all of us. Trevor Van Meter, hello, my friend. Hey, Noah. I got that question. Good morning, Cap. Heck of a hoodie. Just a sweater. Just a sweater. We talked a little about this on Discord, but would like to get your thoughts on curve footprint on mainnet versus L2s. Really, it's not the curve footprint on L2s that I think about. It's really just the concept of L2s and the significance of them compared to mainnet. Everything in the crypto space, Solana, Base, everything in the L2s, all of it is microscopic compared to mainnet. That is the biggest thing that folks don't get when they think about, oh, Solana, oh, Base and Coinbase. These are literally like they're 90 plus percent less capitalized than mainnet. Mainnet is an enormous market compared to everything else. Mainnet has more capital than all other networks combined. So what does it mean from like a Curve perspective? Curve should be one-click deploy, which they are to a degree, as I shared on Discord, and that's all that matters. The simple equation is if you can deploy, deploy. So if you're one-click deploy, then you can deploy. So you should be everywhere. But liquidity is the rest of the equation, but liquidity is a manifestation of market actor subjectivity. They're choosing to deploy liquidity. Liquidity moves based on sentiment and exuberance and shit like that. So this why that's the only way you monetize an L2 or a Solana or what have you. Um, Capital needs to flow across from one market to those markets, and that's what's pertinent. And I don't I don't see it through a lens other than everything other than mainnet is absolutely microscopic. But look, they're significant pieces of technology, and what do we always say about technology? The greatest tech isn't always the greatest investment. So the L2s are meaningful. They are the data stored on Ethereum, persistence on Ethereum, and that's a big deal. And ultimately, L2s are Ethereum in that regard. But if the capital's not there, all right, fine. You could always argue the capital will flow there, and I expect that in a raging, exuberant bull market. But it's not there right now. So I still hold mainnet in a higher regard. Um, what do I expect at the towards like as things appreciate? Which will appreciate more? I'm thinking this through. That's a rhetorical question. The stuff that we own on L2s or mainnet. I don't know because so the L2s are microscopic, which means they have the capacity to monetize extremely. Whereas mainnet is well monetized, but well monetized is a relative phenomenon. Well monetized relative to the US banking system, well monetized relative to the need for Treasury to dump stablecoins to create currency supply. So it's all relative. So does mainnet in the context of macroeconomics monetize better than L2s in the context of mainnet? I don't know, but I sure as hell want to find out. Thoughts about selling 30% of my crypto bag to purchase a house? Uh, yes, to reduce. Well, it's not risk. You want risk. Life is all about risk. You want the risk. You want to own assets. Now you're about to sell assets. This is Raul talks about this in terms of lifestyle chips. Do you? And this is consistent with like delayed gratification type concepts. If you need the capital, you need the capital. But now you're reducing your risk, which means you're reducing the only component of life that has the potential to change your life, which is risk. Risk quickly goes from excitement to fear. Literally, the fear and greed meter is a manifestation of the concept of risk. You're not taking risk. You have no capacity whatsoever to change the financial outcomes. Um, but if you're taking risk, contrarily, you have a capacity to experience financial loss. So there's no easy answer. This is obviously an ongoing conversation. I am not housing. Residential housing is a very complicated topic. It depends on geographic locale. I am very fond of the concept of arbitrage with regard to geographical region. I think folks should be very much more open to literally just going wherever the hell it is best, or wherever the hell your money serves you best or has a capacity to serve you best. Now, in the US, you literally just go across thousands of miles of states and you just drive. There's no, there's boundaries, but there's no rigid borders between states. So you could literally just go. And that is it's just a real thing that is expressed to a degree. Big migrations based on economics from New York and to Florida and California to Texas and Arizona and whatnot. But I'm surprised that there's not more migration. There's just so much empty space in the middle of this country where housing is just relatively inexpensive, if not dirt cheap, and that's in the U.S. It's just that people need to migrate. I mean, literally, what's migration? It's we're going back to like settlers, the 13 colonies heading west. At some point, you got to migrate. And why do you migrate? For opportunity. It's the same reason they headed west. So if you got shit situations in the cities because it's overpopulated and it's a cultural mess and it's a financial mess, get the fuck out. And that's the beauty of the U.S. There's just tremendous amount of space where there's nothing. You can literally build anything you want. So geographic arbitrage with regard to residential real estate is something I encourage. 30% is a massive amount. I don't have a capacity to offer insight other than this conversation. So that's something you'll have to come to a decision on. Um, living, well, I highly recommend in this day and age. Now, obviously, it's different for internationally, and I can't really speak to that. I could only speak to relative to my experience. I encourage all my cousins, you stay the fuck at home. There is absolutely all the incentive in the world to stay with family, especially with parents. No kid in the United States should move out before they're 30. It doesn't make any financial sense. Doesn't make any reasonable sense. Without investing in your 20s, you have no capacity to achieve any degree of financial freedom in your 30s. You're screwed. If you're renting in your 20s, you're blowing all that. Not to shout specific numbers because I know folks listen, family listens. But let's say you're 20 and you're picking up rent, and it's 2,500 a month. But if you stay at home and you instead invest 2,500 a month, that's 25. That's $30,000 a year invested. At 60,000 in 2 years. Frankly, it's 300,000 in 10 years plus appreciation, plus cash flow. That quickly has the potential to become an enormous amount of capital over a 10-year period, especially given the backdrop of a dollar depreciative cycle, which is consistent with what folks would call the crypto super cycle. 300,000 becomes 3 mil, 6 mil by the time you're 30, producing 20%, 10% APR. 10% APR on 3 mil, 300 grand a year in your 30s. But that only happens with sacrifice and having this really high time frame and long-term perspective and thinking very different than other folks, which is not easy. It's not easy to think outside herd mentality. Thoughts about fluid surpassing curve and DEX volume on mainnet. There will be many protocols that do very well across the entire crypto space. Keep it simple. The advisor, good morning. Always a pleasure. Thoughts on fixed rate versus variable rate lending as a biz to invest in? I prefer variable rate. Um, even Liquidity V2 is variable rate. Um, it- so at the core, it's fixed rate, but they have their partners that facilitate variable rate. The whole point is you need variable rate because any creditor needs to threaten a person's collateral in order to maintain the value of their currency. That's the power of variable rate with regard to CDP protocols. If a currency is depreciating, jack interest rates, that forces people to buy currency. So that's how interest rates are governing CRVUSD, bold, money, so on and so forth. All of them. Ma'am, that's it. It's a very simple equation that has been executed extraordinarily well in the stablecoins that emerged from post 2021. Just extraordinary what came out of 2021 that has been refined since then. Cap and hoodie, yeah. Maybe I just didn't do my hair, but you guys will never know. Yeah, I think we're good. This looks really really good from a 1 hour time frame perspective, which is a time frame that I only look at when shit is starting to get a little bit spicy. Nice to see this interaction with the 100 and the 1 hour. What we want to see is the lower lows and a push towards the 102. 102 means you got a breach of the 200 on the weekly. Go over the weekly, I'll show you. There's a breach of the 200 on the weekly about 102 right there. And things could get quite interesting if you finally breach the 200 on the weekly. Because as you see here, this was your 16 and 17 crypto bull market. Here was your 20 and 21 crypto bull market with the double top in Bitcoin. Dollar down, crypto up. Now that I do suspect that we see equity market depreciation this time around. So I expect what folks typically thought as a coupled market, US equities up, crypto up, I don't expect that to occur, which could easily produce pronounced appreciation across the crypto space as the equity market underperforms significantly and crypto is doing what it does with face melting rallies. Capital flows from underperformance to outperformance. So you have a blow off bottom and a real shitty time in US equities, but cryptos could do extraordinarily well given they are not a US market. So as foreign currency appreciates, purchasing power appreciates, and shit gets bought, especially cryptocurrencies. Perfect perspective on housing point, as always, geo arbitrage. It's a tough topic and folks don't often think about it, but it makes sense. Folks should be more open to geographic arbitrage. At what point do you stop saving money? Well, saving money, well, let's break this down because technically I save money. The cash position is save money. So stop thinking about the concept of saving money and start thinking in terms of your life as a portfolio. Your portfolio consists of two components, and this helps me, and this is the way I think: cash and investments. If you don't have cash, no bueno. If you don't have investments, no bueno. You'll never achieve financial expectations without both. You need both. And that is one of the biggest fallacies that I historically recall from earlier in my experience. And I'm sure many people could appreciate. They're like, um, they have their investments and they're like, you don't want to be underexposed so that they never have cash. They're just always invested. No, you still need cash. It's a portfolio. What's pertinent is the balance of the overall portfolio between cash and investments. So cash you could describe as the savings that you're talking about, what people traditionally put into a bank account, whereas investments, as I define, are cash productive properties, which could be real estate or crypto, as we discussed. Um, but you have to balance it. How much cash? These are things that everyone has to answer for themselves. How much cash should you have? It's not a rhetorical question, and folks have to define that. I define that, and frankly, the amount of cash that's appropriate is what makes you feel comfortable. That you feel like you have enough cash, and that has to balance with: do you feel that you have enough investments? Do you own what you need to own in order to express your idea for where the markets are heading? And once you achieve that, then you could say, all right, I have enough investments. And that's where I'm at, where rule number two kicks in: no one to stop buying assets. Rule number one is own more assets. Um, so when I own enough assets, that's when I could accumulate cash. If I have excess cash and I'm like, all right, shit, what the fuck am I doing with all this cash? Then I could readjust and apply rule number one, own more assets until everything comes into balance. But you have to evolve is this gut instinct. It comes deep within, and that only comes from experience and just spending time thinking about these topics. I mean, say 10 meters northwest. I don't understand the reference. Do you still save 2K a month? 10, 10, 10 mil net worth. All right, Mr. Acronym, 10 mil net worth. You still save 2K a month? Uh, well, the equation changes depending on income. So 10 mil and at 10% is $1 million a year in revenue. Then you buy a home. Then it doesn't matter. So there's thresholds in which economics have an effect on choices and options. So clearly 10 mil, a mil a year in revenue. You buy the home with a million a year in revenue. Why spend any of the money at all? Why spend any of the assets and investments at all? Especially if those investments are in the backdrop of a dollar depreciative cycle that could last 10 to 15 years. Yet, yet money buy income. That's a decent quote. Pizza shop analogy. Buy a salary. All these historic talking points we've discussed still ring true to this day, except we've just evolved the framework. Indeed, you still have to live. No point keeping all in investments locked and die before mature. Well, yeah, but that's too much of a long-term time horizon. You're not thinking in terms of a lifetime. So you have to break down a lifetime into periods because periods are digestible. Can't really digest the full lifetime. So when I think of periods, I think really of like macroeconomics. So this is a great chart that expresses periods of time. These are very different lifestyles. The way of life is different when the dollar is going up versus going down. Capital flows around the world are different, which implies asset valuations are different, which implies different businesses succeed and different businesses fail. The whole, the smell, the texture of the way of life is different because of economics and the flows that the relative value of currency creates. In 10, 15 years, you'll be able to say you experienced a very different life between '08 and potentially 2022, just as folks in 2001 had a very different experience compared to folks starting in 2008. This depreciative leg was really weird in 2001. The real estate market was weird. It was a whole different way of life. I remember it. I was in college at the time. Yet I remember this was my childhood. I was born before 92. I was born before 88. Jesus, no shit. I was born at the top of this shit, at least on the way up. I'm not gonna, no one needs to know what year, but I was born, I was born during this shit. I literally experienced all legs of this damn chart. I'm only 40 something years old. What the heck? I didn't think about that until now because I've been thinking about this leg between '08 and now, and I'm like, I lived through this and I lived through this. Damn, life's a trip. Yeah, no, never apologize. The whole point of argument and conversation is it never ends. It is a never-ending thing. Thoughts about converting USD to ETH from cash position right now? I'm not interested because you still need the cash. I don't treat Ethereum as cash. Treat Ethereum as gas. I'm not holding no Ethereum. I hold what I need because I need to use it. With regard to cash, Bitcoin maximalist all the way. Bitcoin, stablecoins. I mean, look at stablecoins now with regard to what's going on in government. It's insane. We basically have just regulatory backed stablecoins going on in the US. The change in tone is insane. I have no words for what's going on. It's very exciting to say the least. Cash Bitcoin is the cash. Stablecoins and Bitcoin are the cash position for me. Last couple questions. We'll wrap it up real quick. I have a busy day and a bit of a headache. Doing the best I can, ladies and gentlemen. Hey, recash and investments. Does it make sense to aim to have target cash present as a multiple of monthly? Yeah. So that is something I think about often. Folks often say you want X amount of reserve. Like, do you have 6 months worth of cash? You have enough cash that if you didn't want to work or couldn't work because there was no work or laid off or whatnot, how long could you survive without having to sell your damn investments? Because the investments are everything. The investments are the only potential for financial freedom. So you never want to sell your damn investments. What you want to sell is the cash or use as the cash component of a portfolio. So that's a big part of the calculus. Yeah, how many relative to your slave wage, that is very reasonable to say. If your day job's pulling in X amount, you want five of that, 10 of that. The more, the better. The more comfortable you'll be. So, but in terms of multiples, that's a great way to think about it. And over time, what multiple is most appropriate that makes you feel most comfortable is something to define. Um, well, discretionary involves just defining rigorous rules. Get rid of discretion. Your job, everybody, is to eliminate discretion. If you have to think about something, instead define rules and stick to those rules and adjust those rules very slowly and very methodically. Because discretion is what causes all the problems, whether it's legal or in capital management. Just not having rigorous rules is what causes all the complexity. You have a good one, yeah. Always a pleasure. Hope that helps out. Iden, stablecoin business indeed seem incredibly well positioned in the current landscape. I just don't have any words for what's going on. So obviously numbers aren't up, but I'm more excited than I've been in years because everything's pointing in the right direction. Damn dollar looks like it's about to roll over. Move, not so much. A lot of volatility. Down 1, 2%, 10 year, up 0.5%. So I don't know if that comes down, but you get the DXY roll over to 102 and lower, things are going to get spicy real quick, even if move remains elevated. In a changing regime environment, you could have some unexpected um, things play out. Bond volatility remains elevated, but dollar rolling over implies something that is not entirely dependent on move rolling over. But if move rolled over, also hold on to your butts, ladies and gentlemen. But uh, either one of them has a very significant, independent yet tightly coupled meaning. Hopefully, Peter, yep. So, as an investor and trustee, you have to pay attention to secular and macro changes. It is a fiduciary obligation to understand the macroeconomic situation, to respect the role. Um, it's the role. You got to define what the role is, and the role with regard to trustee is that of the beneficiaries. So this falls into history. The point of being a trustee is to take care of someone, to be entrusted by someone, and there's no more honorable thing for that to be one's children. The point of a trust. That's why they're damn so powerful. So everyone needs to be their own fiduciary. They need to express and represent um, what needs to be done to respect that role. Very very meaningful statement, Peter. Yeah, well, no ETH for cap. Yeah, no, I got no ETH. Nothing, nothing, no interest. But it's necessary because the protocol. But it's like what Crypto Condom talks about or talked about most recently. Fat protocol thesis. My expectation is the protocols on Ethereum are worth more than Ethereum. You understand? So let's say Ethereum goes to a trill, you could easily have protocols that are potentially worth more. That is the potential scale and scope of these protocols. So there's no business on the planet that's public that deals with foreign exchange or credit. I don't give a shit whether Citibank has shares or not. or Chase has shares on the stock market. That doesn't mean shit. You can't invest in their foreign exchange or credit business. You can invest in their boomer meme coins. But these are a whole nother story. These cryptos we look at are a whole nother story. These aren't boomer meme coins. These are actually ownership of foreign exchange or credit business that never existed before. And that's what folks have missed over the last years. The potential and capacity to actually own revenue share from a foreign exchange or credit business. And these have the potential scale and scope, global scale and scope, just like any other bank, potentially even larger because it's direct to consumer, direct to business globally. Whereas banks need to go through countries. You have to leapfrog through countries to do anything like that. But crypto is an emerging market of emerging markets, accessible to all markets, but of no market. That changes the equation. So the potential valuations of the businesses, the fintech businesses in crypto, I would expect, have the potential to exceed that of Ethereum's valuation, which is a gas token. Only real bad. Well, oh, max pain for folks that have ETH. Listen, whatever plays out, it could easily have. It has a monetary value component because could be used to purchase transactions, pay fees. So that's meaningful to say the least. It just doesn't fit into my thesis of simplicity. I don't need it. Uh, that's the most simple way I could put my perspective. The cap respects the dollar. Well, it's all about the dollar. It doesn't matter what anyone's opinion is. It's irrelevant. The dollar is what it is. We're talking reality. It's literally why I enjoy Brent Johnson's commentary so much that other people get so pissed off at him. But this is what it is, and it is because everyone says so. Every country around the world issues dollar bonds. They The dollar was built, the current form of the dollar is and was built voluntarily by the planet, by every country on the planet. They made it what it is. They appointed it what it is. Opt in. That's the truth of the dollar. Stablecoin maxi. I am I'm a rationality maxi. I don't know, something like that. That's an interesting thought. What kind of maximalist am I? I'm a reductionist. An interesting one. I should give that some thought. George, good morning. Always a pleasure. The advisor, man. If only I had known. Appreciate stablecoins and cashing up. Yeah, yeah. Well, it's just, my investments have collapsed just like everyone's, but that doesn't mean much with regard to my um, 10,000-foot view understanding of where things are. The investments collapse, but that's the whole point. You have less revenue. You're in a period of austerity. You're making less money, so you could do less. So you have austerity and prosperity. Polar, it's binary. It's one or the other. You're either making less money and you're like, fuck, and you cut them back, or you're in a period of prosperity and you're making more money and you can do different things. So the ability to own a business, Forex business, and that's phenomenal and overlooked. And they share revenue deterministically. 20 is hard coded in no board vote that you have no sway in. Exactly. The whole equation is flipped on its head. What it means to be a business and what it means to be a financial business, a fintech business, a bank. Everything has changed. What was that name? Brent Johnson. Brent Johnson. Milkshake theory. But it's Brent Johnson. He's got a lot of ideas, not just milkshake. Milkshake is obviously spot on. The destination is unchanged. Nothing changes the destination. It's just not on the radar. Nothing on the radar changes the destination. So he's he's a character. Hope that helps. You see him on X. What is it? Santiago Capital? Santiago Capital. Have a good one. Always a pleasure. DXY down, market down. Not necessarily. I gotta jump off the stream in like 2 minutes. Folks at the office pinging me. Um, yeah, it's because of the interaction of the 100. I think if we breach to the lows, I think we'll see some interesting market activity. Don't think too much about it. We're looking at an hourly chart. It'll drive you nuts. My kind of maximalist, always a pleasure. What are your thoughts on Pendle? Thank you. Derivative protocol. Um, Albeit there's revenues, the Pendle, so it fits the definition of a business, crypto fintech business. If I had a well enough of a well capitalized portfolio, I'd have exposure. It's just far out on the outside of my wheelhouse because it's in the derivatives category. I literally own nothing that's derivatives. I own foreign exchange, credit, liquidity financing, and liability printing. I don't own anything that's derivatives. But it has a component of liquidity financing via the Pendle, and it's a legitimate fintech business, Spectra as well. So these are very interesting businesses. There's endless businesses. Everyone will drive themselves nuts over how many businesses there are, which is why the best exercise is why not to invest rather than what to invest in. And how do you narrow the scope of what is best to invest in for one's own portfolio? Cap, if and when Aave starts paying, I have exposure to Aave, very limited exposure, but it's all the exposure I need. If Aave becomes what I think it is, I'll be very happy with my exposure. It's relatively small. It's like a 1% position. That's because it's a multi-billion-dollar protocol already, whereas other protocols are just have been destroyed in valuation compared to it. So that is what I use to substantiate the relative portfolio weighting of it versus else in my portfolio. I'm going to wrap it up for today. It is a Wednesday, middle of the week. Thank you all for joining. We have more to come on Friday. It's Wednesday, March 12th, 11:39 p.m. 256 people made it to the end of the stream, and you are all now a little bit more rational because of it. I appreciate each and every one of you. Stay cool, calm, and collected. Watch that anxiety, and I'll see you later this week. Till then, peace.